All right, everyone, welcome back to another episode of Smarter SoCal Productions, keeping you smarter in all areas of SoCal real estate and economics. Today is October 10th, 2019, and we're going to be talking today about why is the Fed lying? The recession is upon us. The Fed minutes have come out, and we've now learned that the Fed plans to turn quantitative easing, QE, back on. Now, Powell, Fed chair, is adamant in regards to the fact that this is not QE this time. He's calling it something else, but it's a name that he has not yet determined. But he is adamant about the fact that it's not QE this time. However, it's clear that that's a lie. A lie because by definition, QE is a large-scale asset purchase, a monetary policy whereby a central bank buys predetermined amounts of government bonds or other financial assets in order to inject liquidity directly into the market. This is what the Fed is doing. They've predetermined how much they're going to increase their balance sheet by in order to inject liquidity directly into the market. This is QE4. Look, we were promised that this wasn't going to happen. We were promised that the Fed was going to be tightening. They started cutting rates in the last 18 months. That didn't work. So now they're going to reverse all of it. We've seen this in Japan. Japan is the one who originally created quantitative easing back in the early 2000s. And it didn't work for them, and it won't work for us. By taking this action, the Fed, in their opinion, will spur spending, will lower interest rates so that we can go out and spend, will lower interest rates so that our bank accounts and savings are worth nothing. And they think that the American people don't remember what happened only a short 10 years ago. So, how does this impact SoCal real estate and economics? I'm going to give you 3 major points and takeaways from this. First point, it's going to keep interest rates artificially low. And what's that going to do? That's going to make real estate prices continue to go up artificially as well. The problem is that we're not taking the bait. You can see it in the microclimate here in SoCal that with the exception of a few pocket areas of certain neighborhoods, real estate prices are actually on the decline. Now, there's information out there and there's reports out there, and we'll talk about that in a future video, that prices are up, but that's false and that's misconstrued. Now, I'm not a doomsdayer. I don't think that housing prices are going to fall off a cliff like they did in the Great Recession. However, I think that we're going to be flat for a while here and might even see a tick down, especially if interest rates do go up at all. So here's the Fed trying to pump that money into the economy, get these sales transactions happening by artificially keeping interest rates low. Second takeaway, if you're a saver or if you have a pension, retirement, or anything else, you are going to not be making money in this current market. The next 12 to 18 months are going to be rough. Unless you want to drink the Kool-Aid and jump in to the equity markets, there's no money to be made. And third takeaway, and most important, is we might already be in a recession. The actions of the Fed to increase its balance sheet, which it doesn't call QE, but it is by definition, means we're either in a recession or right at it. So the time is now. You can make money in a recession. You can lose money in a recession. The key is to stay informed and aware and be able to make the decision based on accurate information. So that's what we're trying to do here. That's what we're doing, keeping you smarter in all SoCal real estate and economics. And we're going to have more videos and more in depth to follow. I look forward to seeing you here next time at Smarter SoCal Productions. Have a great day.